Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals and gold prices. Wow, another down week, albeit not as much as we've seen. And if you go back, you got to go back to April. We've seen a 12% decline in gold prices since April, and it really has never seen much of an uptick. We saw a modest consolidation period, around 1,300, but nothing that held, and the market just continues to push lower. This week pushing as low as 1210, and just the RSIs are so oversold that it looked like, showing that we're so oversold that we actually got a little bit of a bounce, albeit aided by some of the fundamentals that we were hearing out there. But ultimately, you get to that technical point where when are we going to start buying? It looks like the RSI is showing the oversold flashing. We got a little bit of buy, a little bit of a bounce back on Friday, which really just mitigated some of the losses. We still settled down week over week, but it looked a lot worse coming into today than when it ended. So perhaps we're going to see a little consolidation period after these lows were put in this week, lows we haven't seen in almost a year. So gold prices continue to trend lower, although stop the bleeding, I guess, is the best way to put it on Friday. And if you look at the dollar obviously continues to show strength. However, comments yesterday by the president talking about how the dollar is too strong, making trade unfair, and criticizing the Federal Reserve for raising rates, it sort of threw a wrench into the plan here, and you saw the dollar really sell off hard on Friday, and that is what aided, I think, a lot of this buying, albeit with the technicals in gold still showed that there was a buying opportunity. But a lot of buyers out there were waiting for some kind of catalyst, and I think that the dollar selling off was that catalyst. So you've got some buyers stepping in, you've got the dollar selling off, and from a positioning standpoint, when we checked last week, positions were pretty flat. The lowest of the year, long stand at their lowest of the year. However, they aren't seeing any adding to those positions, and I think that this bounce off the low when we got close to 1,200, I think that is going to be one of the catalysts that will get spec longs to get back in, because I think you're wrong. You get a trade below 1,200, you're probably going to throw in the towel and say, let's wait for this thing. Let's wait for some event or some other catalyst event that will change the trend, which continues to be lower. So I think positioning wise, we'll find out this week that we saw some buyers step in on these uber lows that we've seen. Obviously, it's been well over a year since we've seen those lows. So right now, gold still trending lower. The bleeding may have stopped. It's all about the dollar. Continues to be all about the dollar and gold, and I think that will continue into next week. We do have some data. We have an ECB meeting, and we've got we've got GDP, which could be key to the Fed's outlook, and that could certainly have a big effect on the dollar and in turn have a big effect on gold. This is Todd Colvin coming to you from the floor of the CME Group.